Okay, good morning, everybody, and welcome to the Cyber Panel. We've got a great panel for you today. One of the panelists from Boston, the doctor's orders couldn't make it, so what I asked him to do is do a video for about 3 minutes just to say what he was going to say on the panel, and I'll briefly explain that for a minute, and then we'll go into our panel. So can we have the video, please?
Hi, my name's Bob Whitehair. I'm the founder of Eumonics Inc. and ArtLog Inc., and I am the co-creator of the Eumonics platform for capturing, storing, and reusing knowledge, especially causal knowledge and causal artificial intelligence. I'd like to thank the International Insurance Society for inviting me to speak with you today, and I'd like to express my disappointment that I could not be with you in person, but I do look forward to meeting you in person very soon. What I'd like to do in the next few minutes is to give you some insights with respect to causal reasoning, causal artificial intelligence, that will provide some context for further discussion about their applicability to the insurance industry. So to start with, I want to emphasize that all of you have extremely valuable knowledge that you need to understand the full potential of that knowledge, which is probably 10 to 100 times more valuable than you realize, and to encourage you to look for methodologies to preserve that value. When you do that, you want to focus on using methodologies based on principled mathematical approaches. You want to be very careful with heuristic approaches. For example, anything relying on linear regression, be very cautious to make sure that you are preserving the full value of your knowledge. Now, the next topic I'd like to discuss is, at a very high level, what is causal AI? What is causal reasoning? You can understand the differentiation between causal AI and other forms of AI in terms of the questions that you can answer using causal AI. For example, the first question you want to understand is, what happened? What is happening to my company, to my network? What is happening to my cybersecurity risk? And you want to understand that answer in the form of two metrics. One is direction and the other is magnitude. And those are pretty intuitive, but you want to understand, is my risk going up? Is it going down? And by how much? The next question that you want to be able to answer is, what is going to happen next? And you want to answer that question as precisely and as accurately as possible. And the reason for that is really the last question, which is, what should I do about it? So you want to understand what happened, why did it happen, what's going to happen next, and what should you do about it? How do you create an optimal response? How do you minimize your risk? How do you mitigate your risk in whatever manner is available? But how do you shape your environment to avoid outcomes that you don't want? Now, with that, I'm going to leave you in the capable hands of David Peace. I'm going to say thank you for your time, and I do look forward to meeting with you in person very soon, and I hope you all have a great conference. Thank you.
Okay, thank you for that. This is a very interesting subject. Causal AI is a branch of artificial intelligence that actually shifts us into finding the root cause of events. It's based on computational linguistics, which enables us to ask philosophical questions with a new mathematical calculus. It's not new. Bob has been working 35 years on this, from space research into commercial. But for the purposes of this conference talking about AI, it endows generative AI, for example, with causality, so that A causes B. We know that A causes B. Currently we don't know that these variables cause each other. And when we know the root cause, we can endow generative AI maybe to get rid of the bias and the spurious correlations that come from that. So with that in mind, this is the kind of AI that we need to be moving to in the insurance industry. And it's not replacing the current work we're doing, it's endowing it with much more accuracy, which gives us better predictive analytics, more accuracy, removes basis risk, and enables maybe the $7 trillion worth of intangible assets that are currently only 19% insured, according to Aon, a massive protection gap. It will enable us to write parametric insurance around those intangible assets with the basis risk lessened or even removed in some cases. So with that, I'm going to ask the panel to go down and introduce themselves. We have a great panel. We have analytics, we have underwriting, and we have preparation, disaster recovery, all of that, all the elements of it. But I'll let the panelists say what they do, but I'd like them to address one question that, because of the AI concept, is the future of AI in cybersecurity generative? Or do we need a little bit more? So why don't you start, Rochelle?
Yeah, absolutely. I'm Rochelle Clark. I am the founder and CEO of Continuity Strength, and we create business continuity plans for small to mid-sized businesses. Our solution also helps to identify the resilience gaps for those businesses, and it assigns them a resilience score. This is powered by AI, generative AI. One of the things that we also do is that users are able to run a cyber scan for early warning detection of their cyber vulnerabilities. And it's a very good question that you asked, David, around causal AI. We use generative AI, which is one branch of AI that I'm sure many of you are very familiar with. I do think that there are some benefits, but before I go into that, I think that it's important for me to say one thing. The benefits of AI for businesses basically can be in the form of helping them become more efficient, right? Administrative tasks, making them more efficient. The other element is around decision making, coming up with better, faster decisions, whether it's in the underwriting process or the claims process. Perhaps we'll speak about regulations a little bit later on, but what we have found certainly here in the US is that when it comes to those uses of AI, regulators are definitely treading very lightly. And I say that because, and I think you could potentially appreciate the fact that when it comes to AI and general laws and regulations, here in the United States, there is no one law that really governs AI. I know that in Europe, things are a little bit more advanced than here in the US. As a result of that, we have found that the regulators here, the insurance regulators, tread very, very lightly when it comes to the use of AI. They're more likely to approve the use of AI for administrative processes and less for decision making, right? And I think we can appreciate the fact that there isn't that much comfort yet with the use of AI for decision making purposes. I think that perhaps you're familiar with this, but United Healthcare, one of the major healthcare providers here in the US, is currently, they have a class action lawsuit against them for the use of, not for the use of AI, but for the use of because there are no regulations around AI. So it's not for the use of AI, but for the use of AI in their algorithms that caused them to deny claims that should have been approved, right? So it's not necessarily for the use of AI, but for the misuse of the algorithm, which of course was as a result of AI. So I'll stop there, but I do think that as long as we can get around the cons and the downsides of AI, particularly when it comes to decision making, then I think that there definitely is a lot of potential for it.
And I think that's a very good point on regulation, because we talk about the causal side.
Yeah.
We can explain what happened. A caused B, A didn't cause C, didn't cause D. And then when that's explained to the regulator, it's called explainable AI, I think the regulator will understand much better about the underwriting process, which will take Alicia in now, because Alicia is an underwriter, especially in the health and life space, and I'll let her talk about this.
Mm-hmm. Hello, good morning. Yeah, my name is Alicia Menendez, and my background is in underwriting, claims, operations, and have spent like 20 years in reinsurance, doing automation, and also moved 7 years ago to the direct insurer also doing operationalization and digitization of processes. And the last 3 years support companies in all of this process, and not just AI. AI is one part, but we deal, especially I'm based in Asia, and we deal with all of the legacy systems that will lead us one day to be able to have AI. So in terms of generative AI, that's one part. But AI is there are many differences, and it's more use case based. And what are you trying? Not just the problem that you're trying to solve, but how is this going to help you? And you can use generative AI in life and health. We have now quite a lot of advances in terms of summarization, but I'm interested in going a little bit deeper into other types of AI.
Okay. Scott, take us into the threat intelligence world that you're going to feed the underwriter.
Yeah, so my name is Scott Stransky. I work for Marsh McLennan, and I support all of the Marsh McLennan businesses, including Marsh, Oliver Wyman, and Guy Carpenter. And before I explain a bit about what I do, I just want to make sure everybody's awake and tell a quick cyber joke, because I like to do that at conferences. So I was with a colleague the other day, and he was logging onto his computer, and he was typing his password. And it seemed really long. So I asked him, why is your password so long? And he actually told me what his password was, which of course is a terrible thing to do. But he said his password was Snoopy, James Bond, Mickey Mouse, on and on and on, Sacramento. And I asked him, why in the world is that your password? And he said, well, they told me it had to be at least 8 characters and a capital. So there you go with your cyber joke. So what do I do with my, on a day-to-day basis, besides tell cyber jokes? I have a lot of really bad ones. My job is to quantify risk across the enterprise. And we do that in 3 key ways. The first way is by building our own proprietary risk analytics using our insurance loss data, along with a lot of the questionnaire data that we have. As I'm sure you're familiar with, Marsh has a cyber self-assessment. This is a questionnaire that has many cybersecurity-related questions, and part of my team's job is to figure out which of those questions are actually correlated with risk. So we bring together our loss data with that questionnaire data to figure out that correlation. The second area of focus for my team is looking at third-party vendors. There's a lot of vendors out there for cyber. In fact, I get calls from dozens of them, probably per week. And a lot of them are snake oil, meaning they're garbage. There's no correlation between what they have and actual risk. And it's my team's job to figure out which are the good ones, which are garbage. So we have a lot of insurance claims data that we send to vendors, and we can do a correlation exercise between their scores or metrics and loss data. And actually, we've done some with Ross, who can talk about that in a moment. But our job is to verify these vendors and only bring in the ones that are actually correlated with risk. And the third area of focus for my team is thought leadership. So we do a lot of work with academic institutions, universities and things. We write a lot of papers and reports, really to try to advance cyber quantification and cyber analytics. Now, to get to your question about AI, we've used AI a bit in our own work, but maybe not in the ways you'd expect. We've used it in kind of mundane but very useful ways to improve our efficiency. For example, a lot of our brokers write out the claims files. They type them out, it's in a PDF or an email. But there's a lot of very valuable data in those files, and AI has been extremely helpful in order to extract that. So if a broker has written 10 pages about an event, we don't want to read through these because there's thousands of events that happen. So instead, we can have the AI go through and say, oh, this is a ransomware event. Here was the cost. Here was the incident response vendor that was used, and maybe they were a little more expensive than a different vendor. So there's a lot of information we can extract from this literally typed out file using AI. The other thing that we've done, which is even more mundane, is take portfolios, which tend to have tens of thousands or hundreds of thousands of risks, but not very much detail about them, and supplement details. For example, URLs, something as basic as the website of a portfolio of companies. To have an analyst go through 100,000 risks, that would take a very long time. But AI can do that instantaneously. So this is some of the things that we've done with AI. And it's just made our lives a lot more efficient. I'm not exactly sure if that's what you're looking for, but that's literally what we've done with generative AI.
And Ross, I mean, CyberCube is now standard in many insurance companies and also in IIS. So I'd like to bring your aspect, please.
Yeah, thank you. My name's Ross Worth. I'm on the leadership team at CyberCube, and as David noted, we're an analytics organization that serves the entire insurance value chain, as well as partnering with governments and into the enterprise, as well as they think about really quantifying. So how do we put a dollar, or pick your currency, value to cyber risk within an organization, within a portfolio, et cetera, et cetera. Spoiler alert to Scott's comments, we did not fall in the snake oil category, so that's good news for us. Not even a chuckle, okay. As David also noted, yeah, we're kind of used as pretty much a standard across the industry. We serve the reinsurers, reinsurance brokers, carriers, and retail brokers all over the world. Around 70 to 80% of the world's cyber premium is used by our analytics at least once, if not a couple times throughout its life cycle. And it's a pretty exciting space to be in. I've been here 4 years. CyberCube started about 9 years ago inside an organization called Symantec, who you may be familiar with from a cyber perspective. And then kind of then on to AI, right? So we've been using, back when we called it machine learning for some of our algorithms all the way back, from the beginning. We also leverage, similar to some of the Scott's examples, we're leveraging things like generative AI to help look and monitor what's going on out there on the web, on the dark web, those types of things. We've had a bot that we use to kind of scan and read and summarize and pull in news articles for several years now that kind of is part of the research that our team does. I think the way that we're approaching specifically generative AI, we talked about, or you heard about things like the hallucinations and the challenges with generative AI. We use generative AI as the starting point, right? To pull things in and use a summary, and then we're always validating those things before anything's going into our model, because our models are used by the industry as they're defining risk, placing risk, making capital decisions. As David noted, we've been part of every single one of the public IIS bonds in the cyber market that has gone out there. So it's very important to us that our data, that our models are rock solid in terms of the data that they're built upon. Where does the future of AI take us? I think it is a really exciting question. I think we continue to see, as Rochelle alluded to and referenced, efficiencies within just kind of the operations of organizations, ourselves included. I think one of the biggest areas that we're watching is not within our walls, but outside, and then how that impacts our four walls, are the use specifically today of generative AI, both by bad actors and by those responding, right? There's a bit of an arms race there. You've all gotten an email, potentially even today, that you shouldn't have clicked on, right? Whether that was hopefully from your IT department checking that you're not clicking on things, or oftentimes a bad actor. And as you can imagine, you've also all taken the trainings, right? About bad spelling, bad grammar, et cetera, et cetera. Well, guess what generative AI does really well is grammar and spelling, and it can make it worded exactly like your CEO, talks and speaks, right? And some of those things. So that's something that we continue to watch as we look at kind of the entryway for things like ransomware and attacks into organizations. And similarly, we're watching organizations as they ramp up their responses in that space. And then that's something that our team continues to watch as we do iterations of our model to say, how do those two sides of that same coin impact what's going on in the models, the additional impacts coming, and the outputs and the overall risks and the size of what the immediate risk and the long-term tail looks like in those spaces.
I'd like to put all of this together into some kind of ecosystem, because the word silos has come up a lot in this conference, right? And I run a cyber captive, and I ask for sort of risk, and I get 5 underwriters. I get one from property, one from D&O, one from cyber, and they're all siloed, and it's very confusing. So I think we need to try to put together. We have an underwriter here, we have preparedness here, and we have the analytics feeding that information. How can we create a more smoother ecosystem here to improve cyber risk, improve the quantification, and thereby get better products? So can I start with the analytics guy?
Yeah,
how would you feed the underwriter?
I'd love to start, and you said the right word, ecosystem. That's literally my job at CyberCube, is developing that ecosystem and partnering with folks that are both our clients and the tools that our clients are using, right? So my goal, I'm not precious about how our data is used. I want our data to be used full stop, right? Whether that's via our SaaS applications or whether that's integrated into our clients and partners ecosystem. So what we've done, and where I've focused the last year and into next year, is How do we create those relationships between organizations? What are the platforms? What are the tools? What are the workflows that our end clients are using, right? So we've done some of the kind of low-hanging fruit of integrating into broker management systems. So when a broker is out there quoting a risk, they're automatically getting cyber analytics back. So CyberCube is automatically suggesting, here's a loss curve for the company that you're exploring and getting a quote for. Here's what their peers are doing in the same industry, same size, same geography. They're transferring risk rather at the 97th percentile, and for you, that's $200 million worth of cover. So that's the amount that you go back to your carriers and quote, is this $200 million worth of cover? So we've done those low-hanging fruits. The next steps are now, how do we get that across the lifecycle ecosystem, right? If our data is used by every single or most of the points along that policy's lifecycle, we've recently released tools that allow you to say, yes, broker, here's that data. Let's automatically feed that into the carrier who's using a more detailed underwriting data in the underwriting activity to help streamline and automate that process, to automatically escalate things that require more validation and prioritize the underwriting assistance time. If you're also using our tools to look at your overall portfolio, we can tell you what the marginal risk is. If you're already writing Marriott Corporation and you start to write Hyatt, here's what that does to your portfolio by bringing in that risk. So you have that information at the time of decision. That, of course, is helpful as you're evaluating your overall portfolio, as you're looking at, and then that flows into your reinsurance discussions and where your capital and how you're managing that capital in that space. So that's what we're leaning into today, which I think is very exciting. As was discussed on the last panel, this is an industry known for really quick movement and innovation. So we're really excited about everybody Again, nothing, come on, maybe I should tell one of Scott's jokes. Maybe the sarcasm is not the right, but nonetheless, I'm very excited about this. We've seen excitement from the market out there. I think we'll continue to move in that space. The next frontier, if you will, is beyond the cyber insurance industry into governments. We've been having conversations in the States and across the pond about backstop, public-private partnerships, what space should the government play in this space as it continues to grow. Similar but different, obviously, to things like Florida and hurricane. How do governments stand up and structure cyber so that it's tenable, et cetera? So that's the next frontier beyond the cyber insurance world for us.
So I'd like to drill down a bit onto healthcare. I think that we talked about life and healthcare here, and I think one of the most useful uses of the AI, the causal AI, is going to be in healthcare, and healthcare is obviously a risk. I mean, in threat intelligence that you do at Marsh, I mean, are you involved in the healthcare side?
So we look at all industries.
Yeah.
So I can give a broad answer and then maybe drill a
Yes,
little bit into healthcare. So as I mentioned earlier, we have this questionnaire. There's a lot of questions in it. Our clients always complain, oh, there's too many questions in this questionnaire. So one of my team's first jobs when we started our group, which was about 3.5 years ago, was to really correlate those questions with losses, because there's a lot of questions in there that may not be so useful. So what we did was we took the answers to every single one of those questions for all of our clients and all the loss data we had and joined them together. And what we found was that some of the questions are strongly correlated to loss, some of them are not. So what we did was we took the probability you had a claim if you said yes to the question, the probability you had a claim if you said no to the question, and divided those two things together. Basically, it gives you how much more likely are you to have a claim if you say yes or no compared to the opposite. And what we found was there are some that are super correlated. For example, there's a question about Active Directory hardening, which is something you may not have any idea what that means, but your chief security officer, your IT folks would know what that means. And it turns out you were 5.58 times more likely to have a claim if you didn't do this than if you did. Luckily, 96% of our clients already did that, but for those 4% who didn't, this is an area where they can very quickly improve their cybersecurity, and it's a data-driven metric. It's not like an expert says this and you have to trust them. The data actually indicates it. When we did the study, we found that there's some questions that didn't have much value at all. So these are questions where if there isn't that much time to fill out the questionnaire, maybe you ignore those questions or leave them out. Some of the questions we actually found counterintuitively had zero signal strength, meaning it seems as if it was best if you answered no. But when we dug into them a bit further, it turns out that there just wasn't enough data. So we couldn't just take the data alone, we had to have human intervention involved, which is an example of why we can't just use AI, because the AI would say, and I'll give you an example in a second, that this question should never be answered yes. The question is, do you have good physical security around the server room in your office? So you think, of course, this is important. You need to have physical security. But it turns out the signal strength was zero. Well, we dug into the data a bit more, and it turns out only 4 of our thousands of clients said they don't have physical security, and none of those 4 actually had a loss. So if you just do the math, it would imply, oh, we shouldn't have physical security because we won't have a loss. Of course, that's absolutely ridiculous. I would never tell you all to do that. But this is why you can't just take the data as given. You can't just use AI because the AI wouldn't necessarily realize, oh, there are only 4 data points that said no, so you can't really trust it. So you have to go a bit beyond just data analysis and have humans involved as you're getting into it. As far as different industries, healthcare is certainly a very important industry for us. We've seen lots of breaches in the healthcare industry over time. We've seen lots of breaches in several key industries. Healthcare, education tends to have a lot of incidents. Finance, of course, because it's a big target. Some of the industries are maybe a bit less at risk, like agriculture, mining, and others. But healthcare certainly is a big deal.
So let's get it on to the Rochelle and Alicia here, because these guys are going to feed you information. You're going to need this information to do the nirvana, which is underwriting and claims together in dynamic real time, right? So if, first of all, Rochelle, what do you expect from these analytics guys for you to do your disaster recovery and your preparedness?
Well, I think it's worth mentioning, particularly when we speak about cyber, there's one thing that's unique about cyber versus other types of coverage. Cyber is the only type of coverage that requires both proactive and reactive elements as conditions of insurability, right? Of course, there's a payout, and that's reactive, and I think that's something that we can appreciate. But in order to get cyber coverage, there is something that's called an incident response plan that I think many in the cyber world are familiar with. But this is essentially a contingency plan on how the business is going to react in the event of a cyber attack. And this is a condition of insurability, right? So I think that it's unique. It's a type of coverage that's unique in that it requires both proactive and some element of prevention and awareness from that business prior to even getting insurance coverage. I think that helps feed the underwriting process because it certainly helps with the risk profiling, right? And that risk selection process. So I think that it all works together, very similar to what Ross is saying. We all work as an ecosystem, within an ecosystem, in order to make the product more effective at the end of the day.
So Alicia, let's get down to, healthcare is your strength, and we're talking about the AI, and so you've got respiratory disease, you have mortality, and you have the season of the year, right, and potentially you have pollution. So you need to understand the causes of, why people are dying of respiratory disease, but also the data can be cyber attacks and things like this. So to put together your underwriting here with AI, what do you need to put this together?
Okay, what I need from them, or?
Well, whatever. Well, no, what do you need as an underwriter to? Yes.
Yeah, so as an underwriter, what I need first, one of the parts that is what is happening, or has been quite a lot of focus on streamlining, and then remove all of the transactional tasks or transactional cases. That's of great help, and we are a little bit there. But what would be the next step? That would be more to change the way that we derive the ratings or the risk factors, that we still, it's a very lengthy process where we assess the medical conditions, especially in the death or mortality. That takes very long. We assess the statistics, have to wait years until we're able really to change a little bit the threshold. And with Causal AI or any other type of AIs, so I envision that we are going to be able to fast track that process and start insuring risks that we are not insuring, specific medical conditions. In terms about talking about the protection gap, or open a little bit of more capacity. That's on the health part. On the other parts where I would also like to explore the use of AI is moving a little bit higher on moving from the mass market. Like if we talk about health or even group products, that's we have numbers, we have scales, But when we are talking about affluent sectors or even the high net worth sectors, that is, the medical risk is less of an issue. It's important, so we may have even more data than what we to assess than what we would like. But it's more compliance risk, is anti-money laundering, and it's financial risk. And this is where models would be more useful to give us more comfort in assessing the risk or the risks that we are not accepting today. So it was mentioned before about the high net worth sector in Asia, the capacity and of the very high risks, so 200, 300 million. And those are the ones that are easier to assess because there are data available. But the smaller risk, like the 20 million cases, this bracket, that's more difficult. Like the unicorns, like companies getting into IPO, and this is where we would need a little bit more support also from AI.
Let's get down to somebody who was Prem Watsa, I think, and talked about President Kennedy quote about not looking back and moving forwards, right? This is what the causal AI is going to be all about in insurance, is predictive analytics and using the history to back check and make sure that your scientific hypothesis is right when you're doing predictions. So we need to be reimagining history, not just one historical data set which causes bias. We need to ask questions about other things that could happen so we can shape outcomes from the future. This is how the first man on the moon was done, because you didn't experiment, because there've been a lot of dead astronauts, a lot of the crashed spacecraft. So when we look at this reimagining history, the analytics guys, this is what these outcomes is what Alicia and Rochelle are going to need. Are you looking at this predictive analytics, or are you still looking back on Monte Carlo simulations? Can you?
Yeah, so that's a great question. The first thing I'll say is a very famous quote by a statistician, George Box. And he said that all models are wrong, but some are useful. And I think that's something we all have to keep in mind, whether we're doing cyber modeling, property modeling, or any type of modeling, that we're going to build something that's hopefully very useful for you all to use in the insurance industry, but it's probably going to be wrong. It should be used as a tool, not as the answer. The other thing that I'll say is if we were having this conversation maybe 6 years ago, we probably would not be talking about ransomware. Now everything we talk about in the cyber insurance world is ransomware. So we have to be really, really careful if we're looking forward more than a year or two. Saying that we don't even know what's going to happen is probably the right answer. Our models are updated very frequently, much more frequently than, say, an earthquake model would have to be updated, because things are changing so rapidly. It's very different than a property situation. And I think building models that are going to predict the future, I hate using the word predict. Whenever we give our results out to our clients, we don't say, oh, we're predicting what's going to happen to you. What we say is we're giving you loss estimates. We're giving you a range of outcomes that could happen. And the other thing that we do is we don't say, okay, it's going to be this exact event that hits your company. We say, oh, something may happen that causes a business interruption, or something may happen that causes data to be lost from your company. A few years ago, we wouldn't have known ransomware. Well, ransomware causes business interruption. It causes data to be exfiltrated from your company. But we didn't know it was ransomware. So I'd much prefer to abstract it to that higher level of data loss or business interruption than say, oh, there's going to be a virus named XYZ that hits all healthcare companies in 2 years. I feel very uncomfortable actually saying something like that. Even using AI, we have no way to predict things like that. What we can do is estimate potential outcomes. And I feel a lot more comfortable saying, oh, there's a 10% chance you'll lose this many dollars. There's a 5% chance this many dollars. I don't think it's possible for you to lose this many dollars. Then you, as insurers, can go look, okay, here's how much limit this company needs to have. Here's how much perhaps it should cost. I'd much prefer to take that angle than say, oh, in 2 years it's going to be this type of event.
Yeah, so it's magnitude and direction, as Bob said, right? You're not actually predicting something that's going to happen, but you're increasing the magnitude and the direction of the current risk that you have.
Yeah, when a vendor comes to me and say, our score or model predicts something, I already get a little skeptical of what they're going to say next.
Yeah, and CyberCube?
Yeah, no, I think similar philosophy, it's a hard word for me for some reason, similar philosophy to what Scott is saying. I think one of the things that's critical and core and has been from day one to the CyberCube model and approach is, our tenant is that every single cyber loss is caused by a single point of failure. And that single point of failure is a technology somewhere along the line, right? And so our models are built upon that. And we have what we call kind of families of these types of losses that say, hey, these are the types of things that could occur. You could have a 0-day operating system issue that is exploited and causes a loss. You could have one of your third-party data providers or a content management system, for instance, that causes a loss when it's exploited and those types of things. So we have this catalog of event families of these are the types of things that are going to happen. Much like Scott, right? We're not predicting like this is the virus that's going to happen 2.6 years from now and here's exactly what that loss looks like, but these are the types of things and these are the types of areas to think about. We do a ton of both looking back and looking forward type of analysis, both with our clients and within our team as we're doing model evaluation. So we'll look at a lot of the near misses, right? One of the challenges we hear about cyber and about cyber modeling is, well, you don't have enough claims history, there hasn't been enough loss, we don't have 100 years worth of earthquake and hurricane data, et cetera, to be able to model this. And while that is true, we don't have those things from 100 years. What we do have is the data that shows where these things fit, and we can go in and leveraging AI as well as the analysis of our teams, look at this thing that was caught and didn't spread as wildly as it had. What if this tweaked slightly differently? And what if this tweaked slightly differently? And do these near miss analyses to understand what the implications were, because had these two things gone slightly differently, this is what the outcome would have looked like. And then we can reflect those back and tie those back into those families of loss and those types of capabilities, so that as folks are looking at the differentiation in the market and the diversification in their portfolio, they have that baseline to come back to and make those decisions about their capital, about their portfolio, and about their individual underwriting risks.
And I would just add to that, people come to me all the time, they say they've built some sort of score model that's quote unquote 90% accurate. Well, right here, right now, we can build a model that's 95% accurate. How did we do that? Well, about 5% of companies have claims each year for cyber. So if we just build a model that always says, no, you will not have a claim, it's going to be 95% accurate. No, seriously, that's not a joke. That's actually very serious. So when somebody comes to me and says that they have a model that's 90% accurate, I hang up the phone. I don't literally hang up the phone, but I say, okay, sorry, no thank you. So when people say things like that their model's X% accurate, you really have to take that with a grain of salt, because again, I literally just proved that you could have a model that always says no, you'll be 95% accurate.
Yeah,
also useless, but 95% accurate.
Let's drill down there. I mean, we should be thinking downwardly about mitigation, right? I mean, Vint Cerf invented the TCP/IP, invented the network around the internet. That's why he got the Turing Award. Bob Whitehair is in the camp with a guy called Judea Pearl, who invented causal reasoning, but also Turing Award. So two Turing Award guys can't be wrong. We should be listening to them, right? And moving to their direction. So for mitigation, right? If you think downwardly, what would happen if something was worse? Not how can I make something better? How is it worse? You can look to some kind of mitigation. Take like 9/11. A plane went down, Air Egypt, 999 before, into the water. The guy committed suicide. The insurance industry said, how will it get better? The airline said how it would get better. No one thought how it could have been worse, but then someone put a plane into a building. I'm not saying that it would have saved it, but it's mitigation. So this is what this causal AI is going to bring to the underwriting and to you two, is going to bring this mitigation. So talk about the power of mitigation and what you're doing here.
Yeah, Dave, I think it's a good point that you bring up, and I don't think we have to cast our memories very far back. I'm sure many of you have heard of CrowdStrike, right? The CrowdStrike incident that essentially crippled so many companies around the world, right? Now, it was at that point that many companies recognized, hey, we need to be really focusing on preventative measures when it comes to cyber, because there's a lot that can be done to make their networks and make their businesses even more resilient. And this is the path that many companies are taking. So from a risk management and a risk mitigation standpoint, when it comes to cyber, having your incident response plans, et cetera, these are things that companies are even more so now focusing on. So I do believe that there's a lot that we can do, and I do believe that AI can assist us in this, particularly when it comes to identifying risk. specific risks that are targeted to that specific business. It takes into consideration the business's size, their industry, and their location, even much more so than it has been done in the past, right? And this is the area that we are focusing on, certainly, and this is the area that we're seeing even more increased interest from insurers and bankers, et cetera, because they're recognizing, hey, the cost to provide this type of risk management and risk mitigation support is prohibitive in many cases using the traditional methods, right? So AI certainly is one of the tools that's being utilized to help do this even more effectively, more efficiently, and faster.
Yeah, so the exactly. So the internet network, Bob and those kind of the causal people are looking at the root cause of cyber attacks on the network that surrounds the internet, and then acting on it with an algorithm and try to, if it's 0 day, work on it straight away. So that's going to lead to much more accurate, analytics. So parametric insurance. I personally believe that intangible assets are well suited to parametric as tangible assets are suited to indemnity. So are you underwriting on parametrics? What's your view on parametrics for this underwriting?
Well, I come from the life and health industry.
Well, health event.
Yes, health event, yes. So that is probably different issues that are I'm dealing with right now. Right,
so pandemic. So a future pandemic event, I mean, would require, some kind of bond, some kind of IIS, some kind of involvement. But okay, no, that's fair enough. Yes. We got any questions? I think anyone want to ask a question, please, on the microphone, or I don't see any on the.
Oh, there's Alan.
Just Alan. Just first of all, thank you very much. I think you're all pioneers in a very strange territory. I guess I have a question for the panelists regarding the possible collaboration, or to what extent. This is principally for Stan, for the two gentlemen at the end. But to what extent are you engaging with vendors involved with telemetrics and in trying to monitor, for example, email activity to be more proactive in trying to come using AI to interpret different uses of the internet, because we're looking for a single point of failure. Any individual at any company could open the wrong email and create a serious exposure. To what extent are you working with potential vendors or creating yourself AI or other kinds of telemetrics or interpretive analytics or tools that can help be more proactive?
You want to start? Yeah, I'll start. So there's a lot of different things that we can do. First, there's outside-in scanning. And this is done by a lot of different companies. They try to be like rating agencies for cyber. Some of them, again, are snake oil. Some of them aren't. So our job is to correlate our insurance loss data with their scores. So we get 6 years or so of historical data from the vendor. We correlate it with the score before the event happened, so that we're not swayed by any event that happened. And we see if they're correlated. If they're correlated, we bring it in. That's outside-in scan. You don't need the permission. You're not going into a company's network. The next thing we've done is dark web data. So we've worked with some dark web vendors who go to kind of sketchy places on the internet. They see what the bad actors are talking about. They see if the bad actors are selling stolen records from an organization. And we found very strong correlations between that and insurance losses. But to the point of telematics, this is the brand new area for cyber. And there are companies now that will go in and connect to your APIs with cloud services or other protections. And they'll give insurance discounts for doing this. So many insurers are willing to give a 15% discount on premium if you install this. Not if it's good or bad, just for installing it. This allows them to collect data and actually do the analysis. The point being, we don't actually have the analysis yet, so we don't know what signals are actually in that data today, but over the next 2-3 years, we will. And then they'll not just give you a discount for doing it, but they'll only give you a discount if it looks good, after you're doing it. Similar to like with the cars, if you brake hard, you lose money on your car insurance. If you brake gently, you get a discount. But the inside-out telematics is just starting. What's more common in the cyber insurance world is the outside stuff, the outside-in scans, which I know CyberCube does a lot of, but also the dark web stuff, which is becoming more and more useful.
Yeah, no, I think similar. So we're doing all of those things and a couple kind of more details of that. So we have around 24 different third-party data partners that we use that feed into our kind of enterprise data lake, if you will. We're also, as Scott alluded to, doing our own data gathering where we're doing external scanning and building our own proprietary data in that space. We have, the origins of our organization started with some aggregated and anonymized inside the firewall data, not the specific telematics installed and telling you specifically about your organization, but things that are aggregated up to similar size, similar geo, similar industry of your types of things. So we use that. We have a couple data partners that provide that type of data as well. And then we actually have a couple clients that are doing exactly what Scott was alluding to, right? As part of getting insurance from them, you have to install this on your network and use their tool, and it's part of an overall suite that leads into protection and mitigation, right? So some of those tools are here, early threat factor, so here, do these things and close these things down automatically, all about loss mitigation and those types of things. Similarly, we've partnered with some of our carrier clients to have those detailed conversations as they look at not just how do I underwrite this risk and what this risk looks like in terms of potential loss and so on and so forth, but also what are some things that I can be doing along the way during the policy life cycle for loss mitigation that helps me not pay a claim. It also helps avoid the business interruption or the challenge of having to have whatever that bad activity coming along is. So I think those are some of the things that are out there happening now and included in our models and how our data and analytics are used in the real world, in the market. We've also started exploring some very early stage conversations we've actually talked to some of the individual credit ratings, which is kind of alluding to your comment around every single person is a risk or a single point of failure. And is that something that potentially makes sense to kind of incorporate into the model? Super early days, and we haven't seen that it makes sense bluntly at this stage, but there are some kind of ongoing discussions out there. You get into some, as you can imagine, some of the similar challenges that this industry has seen with using credit score as part of an individual personal insurance rating, using the risk of this executive and those types of things in there. But there are some partnerships out there in the marketplace where our analytics and quantification pair along with mitigation or overall security threat positions that we're seeing and starting to play in the enterprise space as well.
So I think we should, we've only got a couple more minutes, but maybe we should address catastrophe, cyber. I think it's a very important part, and I think the use of captive companies, putting your services, for example, Rochelle, into a captive company will be very important. There's captives are being used now from cyber, and then and then using that to build IIS capital market structures from that. So are you involved in this kind of captive services?
No, not at the moment. But, one thing that really is worth mentioning, when it comes to cyber, I don't think that it's a surprise to anyone that governments all over the world are taking this very, very seriously. Even for ourselves, we are a member of the US government's Small Business Digital Alliance, which is a consortium of companies that provide services that are seen to be critical for small businesses. And it's been top on the agenda of the US government to really protect not only the small businesses, but their infrastructure as well from bad actors. And I think it's definitely a threat that many are taking very seriously across the globe. So I think we're moving in the right direction, and I think that AI will only be an enabler to help us get there.
Of course, we're in Asia, Alicia, so it's a very different world out there with cyber at the moment. I think we're probably a little behind America in this, but some closing thoughts.
Yeah, so in Asia at the moment, except a few companies that are right out there with models, so we're catching up, getting ready to doing all our cleaning all of this spaghetti, as it was called yesterday, but also jump and to take the new advances very quickly.
So the cyber catastrophe, obviously, I mean, I'm in the marine industry. They don't believe they're going to be cyber attacked. Trying to sell ship owners and ports cyber insurance now is very difficult. There's been no event, but we've got to move to some kind of mitigation for catastrophe. So I know that you're doing catastrophe bonds and that kind of thing. So can I get your catastrophe view to finish this? Because I think this is the big subject.
Yeah, I can jump in. I mean, I think so. Yeah, as you noted, we were the model of record for 3 of the 4, and the secondary model on the 4th of the public bonds that were issued in 2023, towards the end of the year last year. We continue to work with other private bonds that are obviously not out in the public eye as well. So it's very exciting to see ILS as additional capital entering this market. We do work directly with captives. We have one that focuses on a very particular part of the energy segment here in the United States of America. They use us for all of their underwriting and how they price that risk across their member organizations. It's an area where I think, as you alluded to, David, that a lot of the captives are seeding this risk out, the cyber portion of it, because they're not familiar with it. So they're kind of earlier in the maturity curve of, should I write this myself, retain this risk myself? Should I partner? Should I reinsure it off? And so that's part of our mission, is to help work with them to kind of build that business case in terms of when you take this risk back in-house and start retaining some of it. And then I think last but not least, to kind of build on Rochelle's point, the governments are very much watching this. We work with a couple of government agencies that I can't name, but you can do some Googling and maybe figure some things out. But they were kind of tasked with, what is the impact to US economy, or this portion of the US economy, or something of that nature, of cyber? And then how do we, as the government, think about that impact, and what is the right public-private partnership to support that and enable the ongoing resiliency of the government and or the economy with the support of the government and the private sector in that space. So I think there's a lot of really exciting things to come along in this space, and it's going to be a fun ride.
And Scott, let's finish on the theme we started on. I mean, AI is a double-edged sword, right? It can prevent cyber attacks or help to prevent them, but it can also write malware and cause it. You can data poisoning, all sorts of new attack surfaces come up. So generative AI on its own in your threat intelligence center is probably not the future.
No, so actually, I'd like to go back to the previous point, just say we're in South Florida here. 1992 Hurricane Andrew is something that people weren't expecting, such a large event, and then it hit. So people are maybe not expecting a large cyber event to happen. It probably will happen, but we don't necessarily know what it's going to look like. AI is probably not going to tell us what it's going to look like, but it's going to happen. And using models and analytics and quantification can help you understand the scope of the potential events that could happen.
But can you just finish on the new attack surfaces caused by AI?
Yes, so it's a way that they can trick people to get into your company. There's a lot of things that can be done. I mean, Ross mentioned that grammar used to be an issue. It's not really an issue anymore for the bad actors. And they can clone your voice now. So you can pick up the phone. It's not only sounds like your CEO, but they know what your CEO would talk. Some of the quips they make, all those different things. AI can really help trick people, so to speak. So you have to be careful.
So the insurance industry should look at causal AI now. Other industries are. We're not looking at it at the moment. And Vince and Bob are right. We need to add causal AI to our programs. And I think that's what the message that I'd like to take across here. Okay, well, thank you, panel, very much.